Hello everyone. Well, the key theme in the markets recently has been higher interest rates as bond markets around the world start to discount the Fed's tapering off. Rising yields are causing increased volatility, which is forcing investors to get out of many of their most popular trades. That's why the best performing currencies over the last month have been the ones with the lowest interest rates, the funding currencies, such as the yen and the Swiss franc, while the worst performing ones have been the ones with the highest interest rates, which were the ones investors were long, such as the Mexican peso, the Australian dollar, and the New Zealand dollar. Emerging market currencies are getting particularly hit in this risk-off trend. How long it continues is anyone's guess. The fact that speculators increased their net short positions in the yen last week, even while the yen was strengthening, suggests that investors believe that fundamentals will win out. But there's likely to be more volatility and more pain in these popular trades before it does. Now, after a couple of weeks without much data to chew on, we now get an onslaught this week. We've got the rest of the May purchasing managers surveys for the manufacturing and services industries around the world, and construction PMIs for a few. On Tuesday, we have our Reserve Bank of Australia meeting, and on Thursday, we have a Bank of England meeting, the first under the direction of former Bank of Canada Governor Mark Carney, and an ECB meeting. The market isn't expecting any change in stance from these meetings, but there's always a chance, especially Mr. Carney may want to make his mark on policy right at the start, as Bank of Japan Governor Kuroda did. Friday, we get the all-important U.S. labor market report, which is the main driver of Fed policy and hence the main driver of markets in general nowadays. Today's indicators started off with China's HSBC manufacturing PMI for May slipping below the 50 boom or bust line. That weighed on commodity prices and commodity currencies, with the New Zealand dollar in particular weakening further. Later today, we get the manufacturing PMIs for the UK and Italy, and the final manufacturing PMI for France, Germany, and the EU. The forecast for the final PMIs is the same as the initial number, so not much impetus from there. In the US, the market expects the ISM index to be unchanged as well. However, the Fed's regional surveys generally rebounded in May, so there's the possibility of an upside surprise there that would boost the dollar. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.